Let's now have a look at the very latest in the world of business. The local stock exchange looks set to open to mixed this morning amid some downbeat Chinese data. All eyes are now on a U.S. jobs report scheduled for release later today. Activity in China's services sector slowed in August. A survey showed on Friday, highlighting the ongoing risks posed by COVID-19. Bianca Botes, Executive Director at Citadel Global, joins us now to talk through the very latest business news in early trade. Bianca, very good morning to you. Always a pleasure having you on the show. A rally in the Rand came to a halt on Thursday afternoon. That's amid all the caution ahead of a U.S. jobs report. Talk us through how the currency is looking in early trade and how it's perhaps likely to perform post that data.
Good morning to you and the viewers. It's actually quite interesting to see that the rally has come to a halt, especially considering we had some poor data coming out of the US on Wednesday. However, it's all eyes on the non-farm payrolls that are due for release today, as well as the US unemployment numbers. And that will really give us an indication as to what we can expect from the Fed in terms of asset purchase tapering, as well as potential interest rate increases coming forth, hopefully by the end of this year or early next year. That will really determine the course of the Rand. If we see better than expected numbers from the US, that will be dollar positive, meaning that could add some additional pressure to the Rand. Yesterday, we already saw that the Rand lost some momentum, trading from 14.30 back up to the 14.40 mark today, and we will really be dependent on those numbers today to set a new direction for the Rand.
Now, oil prices slipped as Hurricane Ida hit U.S. oil demand. Talk us through some of those developments in that space.
So Hurricane Ida has definitely made a dent. We've seen supply being halted in the Gulf of Mexico. However, the oil price, even at the slightly subdued levels, are still trading close to a one-month high. And that is on the back of demand picking up, as well as a weaker dollar. The weaker dollar has really made quite an impressive mark, not only on commodities and emerging currencies, but we're also seeing it filter through into leveling out some of the other events that we are seeing filtering through, like the Ida hurricane. So there's quite a bit of offset taking place there. We've also seen that OPEC has committed to adding another 400,000 barrels of oil a day, and those numbers have also sustained the oil price close to the one-month high levels that we are seeing at the moment.
And gold prices rose in early trade after the dollar weakened. What are those sentiments and those driving sentiments pointing to when it comes to those moves?
So the gold price, just as oil price, just as the Rand prices, are all very dependent on these dollar moves that we are seeing. A weaker dollar means that we are seeing quite a bit of sell-off in the dollar assets, and those investors that used to be invested in dollars are now actually falling into gold instead, and that is driving the gold price slightly higher. We have been hovering around the 1,800 mark for most of the week. And we expect those numbers to continue should the status quo in terms of Fed tapering remain in place.
Bianca, in about 25 minutes from now, President Cyril Ramaphosa is scheduled to take questions in Parliament. The President is expected to provide an update on the country's economic reconstruction and recovery plan at this very session. What would then investors like to hear from South Africa at this point of the year, post the unrest and towards economic sustainability?
I think when we say that this questioning session is going to be hard, we are really putting it lightly. I think that President Ramaphosa is going to face quite a few challenging questions, with a lot of emphasis on employment. Recently, we've seen the unemployment figures reach the highest since the inception of the survey, and that is really concerning, especially in a country where we are struggling to stimulate economic growth, even prior to falling into a pandemic. So there's going to be a lot of focus, instead of just looking at policy, but rather at action. So a lot of emphasis on what are we doing as a country, as a government, to actually stimulate those jobs and to ensure that we have economic sustainability going forward. There will be quite a few questions around the recent cabinet reshuffle, how that will impact on the economic recovery plan. So Cyril Ramaphosa definitely in for a tough session, especially after the recent unrest. I think social cohesion plays into the narrative of economic recovery and job creation. And at this point, economists as well as investors want to see action coming through, stimulating those jobs, getting the economy off its knees, irrespective of what that might mean for government policy as a whole.
Very well. Thank you so much for your time. Let's leave it there for now. Bianca Botes, Citadel Global Executive Director, with action being the operative word.